What on earth is the accounting equation? Hi guys, in this video we're going to make logical sense of the accounting equation. My aim today is to help you better understand the basics of the equation. But before we start, I would like for you to remove any confusion you may have or might have had about the accounting equation. We are starting on a clean slate. You see, once you understand the basics of the equation, you will be better equipped to master other accounting techniques. Okay, so as the term accounting equation implies, this is an equation and it always needs to balance. We can say that the basic accounting equation is the accounting golden rule, if you like. Essentially, what the equation is saying is that everything that a company owns, so all the assets in a company, they must have come from either debt or equity or a combination of both. I will explain the terms debt or liabilities and equity or owner's equity in more detail in another video. For today, we are focusing on the basics of the equation. But basically, guys, anything that a company or business owns, so I'm talking about assets such as cash, stock, or equipment, they must have come from either debt, for example, a loan from the bank, or equity, for example, if the owners of the business contributed those assets towards the business, or a combination of both. In real life, the assets that a company owns would have come from a combination of both debt and equity as opposed to just debt or just equity. So, given that everything a company owns either came from debt or equity or a combination of both, results in the following equation. Assets equals debt plus equity. What the equation is telling you is that assets, everything a company owns, must have come from debt, borrowed, or equity, came from the owners or the owner of a business, or a combination of both debt and equity. Another version of the equation is assets equals liabilities plus stockholders' equity. Both these equations are basically communicating the same idea. They are saying that everything that the company owns must have come from either debt or equity or a combination of both. This equation has to balance at all times. Let us do an example. So let's say Kim starts a restaurant chain company. Let's call it Wonderful Waffles, Inc. So to start Wonderful Waffles, Kim decides to put in $1 million from her personal savings. I know, Kim is loaded. But Kim decides that the $1 million is not going to be enough. So Kim asks her dad to put in some money and invest into the business, and Kim's dad eventually invests $500,000 into the business, in addition to the $1 million Kim has invested. It means that business, assuming there's no debt, has total assets of $1.5 million. If Kim later on decides that the company needs more money or more assets, she can go and borrow from a bank. And if the bank grants her, for example, an additional $200,000 to the money she already has, it means the total assets in that company is going to be $1.5 million plus the $200,000 debt would make total assets in the company equals to $1.7 million. The accounting equation has to balance at all times, and in this case it does balance. Kim put in $1 million, her dad put in $500,000. So we know that the value for equity is $1.5 million. And then debt is equivalent to $200,000. That's how much that has been borrowed from the bank. So it means the total assets in the company of $1.7 million came from equity of $1.5 and debt of $200,000. So you might be asking yourself, who cares and why does this matter? Well, guys, in accounting, we need to do exactly that. We need to account for each transaction. Therefore, for every asset that the business owns, we have the responsibility to account for where that asset came from. Was it borrowed, or did the owner contribute it, or both? The equation can also be used as a checking tool. What do I mean by that? Well, if the equation does not balance for some or other reason, you know that you have recorded something incorrectly because the equation has to balance at all times. Going back to the example that we did earlier, Debt borrowed on behalf of the business was $200,000, and the business owners contributed $1.5 million into the business. If total assets were incorrectly recorded as $1.2 million as opposed to $1.7 million, it means the difference of a $500,000 shortfall was not accounted for. Inversely, if total assets were recorded at $1.8 million instead of $1.7 million, how do we now explain the additional $100,000 investment? Where did it come from? Something must have gone wrong, and we know this because the equation does not balance. The accounting equation also forms the basis of the double entry accounting system. Now you ask me, what is the double entry accounting system? We will look at this in a later video. The accounting equation also expresses a company's capital structure. Thank you for joining us today. That is all we'll be covering for today's video. In the next video, we'll be explaining each of the elements of the accounting equation. So we'll be looking at assets, liabilities, and equity in further detail with some very helpful examples. Thank you for joining us at Finally Awake Academy. Please remember to subscribe to this YouTube channel. Thank you for your time. Be blessed.